If you're a US citizen living in New Zealand, there's a 4-letter acronym, PFIC, that stands for Passive Foreign Investment Company, that creates headaches and can significantly add to your tax bill. In this video, we're going to break down what a PFIC is, the tax treatment and issues they create for US expats, and importantly, how you can navigate or even avoid them entirely. Hi, I'm Jim Smith, Senior Financial Planner here at Pacific Wealth. We specialise in helping new migrants and returning Kiwis navigate the intricacies of cross-border financial planning to help you make the most of your new life in New Zealand. In this video, we're going to break down what a PFIC is, the tax treatment and issues they create for US expats, and importantly, how you can navigate or even avoid them entirely. The PFIC rules were originally introduced back in 1986 during the tax reforms introduced by President Reagan. The goal was relatively simple, to stop wealthy Americans from sheltering money in offshore tax havens. Lawmakers of the time wanted to prevent US taxpayers from deferring taxes or converting ordinary income into capital gains by locating investments overseas. A PFIC is a foreign corporation that meets one of two criteria. 75% or more of its income is passive, like interest or dividends, or 50% or more of its assets produce passive income. When you live overseas and invest into local fund structures that originate outside of the US, they often get caught by the PFIC rules. This includes many fund structures such as New Zealand Portfolio Investment Entities or PIs, Australian Unit Trusts or AUTs, or even exchange-traded funds that are not listed on a US stock exchange. If you invest into a PFIC, whether intentionally or not, this can create a range of additional issues. If you sell a PFIC investment at a gain, it is broken up over the years you've held it and each year gets taxed at the highest marginal rate, currently up to 37%. You also lose access to the preferential long-term capital gains treatment, and there's also interest to pay on the deferred taxes. Tax advisors will tell you that this is really a beast of a form and you might need to file one for each PFIC you hold every year, even if you do not make any distributions. This can significantly increase your US filing costs. For those US citizens living in New Zealand, KiwiSaver accounts are typically treated by the IRS as foreign grantor trusts rather than qualified retirement plans, which means that the underlying investments can be treated as PFIC. The good news is that there are strategies to avoid or reduce your PFIC exposure, and these do not have to hinder creating a well-diversified investment strategy. Where possible, avoid investing in local fund structures that meet the PFIC criteria, so avoid things like New Zealand PIs, Australian Unit Trusts or exchange-traded funds that are not listed on a US stock exchange. You can invest directly into New Zealand and global companies, but US-listed exchange-traded funds or ETFs will most likely be your go-to fund structure and from which you can build a low-cost and well-diversified portfolio using ETFs from the likes of Vanguard, iShares and other companies like Dimensional Fund Advisors. If using a New Zealand-based investment platform to buy investments, make sure you're using one that provides a direct ownership of the underlying investments. Many platforms like SharesEasy that offer fractional share ownership break the direct ownership link with the investments, and hence you can inadvertently be considered as holding a PFIC investment. If using an investment platform, you should check that you have a direct ownership of the assets with your tax advisor. At the time of producing this video, there were only 2 KiwiSaver providers that offered the investment flexibility to select PFIC compliant investments. These are the Craig's KiwiSaver scheme and the KiwiWrap KiwiSaver from Concilium. The Craig's KiwiSaver scheme can be accessed directly from the Craig's Investment Partners website. The KiwiWrap KiwiSaver scheme is only available through approved financial advisors and has a $50,000 minimum investment. However, despite the inclusion of a fee for the advisor, the overall costs of KiwiWrap are likely to be lower than Craig's and therefore in many cases could be the preferred option. Both these KiwiSavers have a very wide range of investment options. To be compliant, you should only select shares of listed companies, directly held bonds, or US listed exchange traded funds. If investing in a PFIC is unavoidable, consider the QEF or mark-to-market elections. These can sometimes soften the tax impact, but these are often complex and should only be considered when working alongside a US tax advisor. At Pacific Wealth, we specialise in helping US citizens living in New Zealand efficiently design investment strategies to manage the cross-border challenges. If you are a US citizen and looking to restructure your investments, let's have a conversation. We can help you save time, stress, as well as reducing your tax burden. If you're interested to learn more about financial and retirement planning issues that international migrants need to know when moving to New Zealand, we've created other videos that you can explore on our YouTube channel. You can also visit our website www.pacificwealth.co.nz, which has other information and articles and where you can book a free initial consultation. Thank you for watching, and if you found the content helpful, please drop us a like, comment and consider subscribing.